So, Sonam, a very warm welcome to the third episode of the Thinking Out Loud podcast. We're glad to have you as one of our esteemed guests, and thank you for trusting us with giving your time on a weekend, so as to say. So beginning with,
Yeah.
you are known as a quant trader or a quant research person who has this amazing track record on the small case, which we will cover in the later part of our conversation. But how did you start your career in the stock markets? It's something that you've grown up being with, seeing your maybe family members getting into it, or it was just a personal passion since maybe your childhood.
Yeah, I mean, I have been quite interested in seeing my father trade and things like that in my childhood. But I mean, it was not something that was very seriously on my mind. I wanted to be like an engineer, like my father, and do all that. Uh, I think when I passed out of college, it was in 2010, right? That was the time when sort of these algo trading and all these things started in India, right? If you look at the history of the NSE and the co-location, the automated trading,
Right,
algo trading sort of started in 2010-12, right? And
right,
I was not sure on when I sort of graduated from college, I was not sure what I wanted to do, right? I studied chemical engineering, but I really did not you know enjoy the job that I got in chemical engineering. So I was exploring what to do, and I started studying for the CFA, for the IMs and things like that. And while studying for the CFA, I thought quant finance. I mean, I was really interested into the financial topic, right, from accounting to everything else. And I really liked the quant aspect of it. And I got my first job with, very fortunately, with this company called Forefront Capital, which was started by Radhika Gupta, Nalin Muniz, and these guys. Which was These guys were some of the people who were doing some very interesting work out here in India, and I got my first chance to work with them. I was really fascinated by working on algos when I went there, seeing them make money based on the differences that you could create, and that was something that sort of hooked me out there. Um, Post that, I pursued algo trading. I wanted to do it, uh, do that for a living. But obviously, you being a beginner, you can't, you have to do your work experience in that field, right? So I joined Edelweiss algo trading desk, where I worked on creating algos for these large scale funds, right? On the institutional desk, all the hedge fund, mutual funds, and all these guys, whatever algos they used, we used to design and create them. So this was a very high volume, high risk. Sitting on the right there on the trading floor, I used to work there for almost 4 years, and but yeah, that was a little bit more trader driven, and I wanted to do more quantitative systems. So I sort of moved to HSBC, where I had an amazing time working on these quant strategies for the European and Asian markets, which were traded live, and we could deploy a lot of capital over there. uh, it had a proprietary element to it, where you could take decisions also, which was really interesting for me. But uh, but HSBC closed down, and actually not HSBC closed down, but yeah, that desk closed down. And as the desk closed down, I thought I should pursue an entrepreneur opportunity with QPlum, where they were trying to set up something in India, and I was really interested in doing that. So I joined them. Again, my luck sort of hit me, and after 8 months of me joining, those guys said that we don't want to do this anymore, and they sort of shut down the shop. So I thought, let it be. I've had like more than 8, 9 years of experience doing this. I'm very confident about it. So, and I think there is interest in quant, right? People did not take it seriously, but I could see that, people are interested into technical strategies, technology driven strategy, data driven strategies. So I thought that I would pursue it on my own. I'm good at it, then why not do it, right? And that's when Right Research was born in 2019. I started with Small Case, which was again a strike of luck that Small Case had just started the publisher platform. They were onboarding new advisors. So I think one of the first few, like second, third people to sort of join that program. And I got a lot of help initially from them, right? They were trying to push this particular program, grow it. So I got a lot of help from them in the marketing side and various aspects. And fortunately for me, my strategies, my work in quant continued to do well, and the help on the marketing side and the good performance sort of worked, and we have been able to scale Right Research quite a lot. We've grown quite a lot from where we started in 2019 We have almost 10,000 active users right now. We manage, more than 150 crores in AUM right now, and performance has been up to the mark all through and through, right? So even you look at the good times or bad times, in each of the times we have been able to sort of deliver good performance, and we want to continue doing that, expand more, bring more products, explore other avenues of the market. Yeah.
Absolutely. So like I can realize that there was no dejection from your end, maybe when the HSBC desk shut down, or maybe after that. So
Mm.
you like channelize that energy into something which you wanted to do because you're always interested in this. So just to like add on to the question, like were you always interested in this tech side also of the algo, like writing the code that you do, or on your own self, or you have a tech team separately who kind of maybe writes an algo, or derives these quant kind of strategies, so as to say.
No, no, I always write the algos on myself. I'm really interested into that aspect, right? Uh, when I was in Edelweiss, I even used to write these algos in C++, which is actually complex, right? Now I work on Python, which is a slightly easier language, but I do write the logic of the algos myself. I like, because that's an experimental process, right? You have to keep on researching,
Right.
experimenting, and that's when you find something out. So I do that, but obviously I'm not good at the broader tech, right? I don't understand what a microservices or a web service is, and if you ask me to talk about architecture, probably I'm not the best person. So I rely on people who are much more well versed in tech than me for those aspects. So fortunately at Right Research, again, I have a few people who are really good at those technical aspects who are helping me out. But yeah, I do focus on the quantitative side on my own.
So, Sonam, just as a
Mm.
follow-up question on that, like you were talking about uh,
Mhm.
2019 and small case was becoming popular at that point in time, right?
Yeah,
So, given that we are in the Web3 space and we have some exposure to the equity side of things,
yeah.
how do you think thematic investments or thematic basket investments, if I may say so, for both crypto as well as equity will progress forward in the future? Because there are a lot of these startups in the Web3 space, if I may say so, which are trying to combine social investing with thematic investment in the crypto space as well as in the equity space. So how do you think that's going to transcend in the future?
So on the Web3 space, I think, see, when you do basket investing, what you are doing is you are diversifying your exposure, right? So that obviously gives a better experience to somebody who's looking at these instruments for investing, right? For the investing purpose. So, I mean, when you create a basket of cryptos or basket of stocks, you have diversified, the exposure, and your risk is going to go down low. So I really believe, that is something that would be very interesting for people. And you can do a lot of risk management when you do it. Like I said, diversification, including, instruments that have negative correlation, so that, your risk of the overall portfolio goes down, sort of setting other risk management tools that can make this basket robust, right? I think that is something that will always be there. When you talk about equities instead of cryptos, equities themselves have number of other factors that you can look at. I mean, I've tried working on a crypto portfolio, but there's no fundamental in crypto that I sort of understand. So I work with technicals over there. But on the equity side, you can actually look at a number of things, right? Be it from the quality of the company, growth of the company, value of the company, and bunch of other things. Maybe you can get some alternative data about the particular stock, right? The sentiment that is going on, etc., etc., right? So following each of these themes, which actually move in a very very diverse direction in the market, right? So a value strategy moves in a very different direction than a quality strategy, right? These are very very different factors, and both of them in the long term can give you outperformance. So creating a mix of that, playing around with these themes, I think, is very interesting for creating long term good outperformance in the market.
So obviously, I write research as a small case. The
Hmm.
basket of stocks which you invest in, and that's
Yeah.
rebalanced every time. your CAGR is obviously 62% right now for your 2-year CAGR, right, which is exceptional. And
Yeah.
so if you can like enlighten our audience on, how does right research kind of do or place this strategy, maybe not the strategy which you are deploying, but what's the difference between, like, there is a leg called a fundamental investing, then there is this only technical analysis, then maybe there is something called quant based analysis which you guys do. So how do you devise a strategy? How does a quant strategy come into existence? What are the parameters you look into while devising a strategy?
Right. So what I do is not actually very different from what a fundamental analyst or a technical analyst sort of does, right? So what a fundamental analyst again is doing is trying to analyze the fundamentals of company, look at certain ratios, probably identify the certain companies that rank high on certain metrics that he sort of wants to look at. And similarly, a technical guy maybe is looking at certain indicators where he picks up certain stocks that have crossed that indicator, right? So and these guys might do it in a manual fashion, right? They might have a bunch of charts looking, or they might have like a bunch of Excel sheets that they look at, and then they make a decision. What we do as a quant firm is that we automate all these things, right? So the how looking at the chart is not something that I do, but the algo does it. Similarly, looking at the Excel sheet is not something that I do, but the algo does it, right? So I don't have a constraint of I can have 5 analysts or 10 analysts. I can have as many algos that I want, right, which can look at whatever data that we have. And again, I'm not constrained by that this is my universe of 50 stocks. I can actually expand it to as many stocks that I want and be confident with it, right? So that is so what we're doing is quite similar, but we have used algos to do it, and now that you have automated these basic functionalities, then you can also add more nuances on top of it, right? So maybe prediction models, right? We use certain prediction models to predict the risk in the market, right? Where we include AI and things like that. So you can add other nuances on top of the process that you have built, and the goal for everybody is at the end of the day, increasing returns, reducing the risk, and reducing the uh, transaction cost, right? Not trading too much, not churning too much, right? These are the goals for everybody, right? At the end of the day, but the process through which we sort of deal with it are different. And so the portfolio that you were talking about, at 62% CAGR, is our momentum portfolio, which has sort of a technical nature to it, right? We look at the price trends, try to identify those stocks that will have a lasting trend in the market, right? And there are various ways of sort of evaluating which stock can be having a trend, uh, and how we sort of improvise here is we have very set models on risk management, diversifying the basket, things like that. De-allocation, I think de-allocation is really important in this market, right? That when the risk in the market increases, you move to cash, right? Some amount to cash. So I think a lot of people in the volatility in the last 6 months sort of moved everything to cash, or like 40% to cash or 60% to cash, which was you know fine, because there was panic in the market. But we did not, we just followed the model, right? I mean, I also panicked, right? Like I know, I'm not sure that somebody wouldn't have panicked. I also panicked. I thought that, do we need to go into this much cash? But I just followed the model which said that 10 to 15% cash is what it said, and that's what we did. So as the market sort of recovered, we've seen that our portfolios have recovered way faster than anybody else, right? So which is just relying on the model, how you have back tested it, right? So whenever we create a strategy, we sort of check it over last 20 odd years of data, right? That what happens in different scenarios, how will we handle different scenarios, and that's how that sort of strategy sort of comes into structure. And then we have just relied on the model, and there's no I have panicked, but sort of had that model to trust to go ahead, right?
So it's basically something like a system-based trading where you
Yeah.
kind of follow a system and you just stick to it even if you have a drawdown kind of
Yes.
scenarios, right? So that's when maybe your trust in the system becomes more strong when the market recovers. It shows better results than your
Yeah.
peers or
Yeah.
whatever your benchmark is. So then when you say the factors which you take, so some may be for me, maybe fundamental is one of the factors which makes me feel that the stock is in a momentum phase, right? Because
Mm.
it's making new 52 weeks highs.
Yeah,
So
yeah,
what are such other factors which you kind of have in mind, or you maybe have it in your algo, which you keep in check to see that this stock has momentum? And obviously I'm talking about the right momentum portfolio
yeah,
for
yeah.
reference.
Right. So we actually use more than, I think 5, 8 such factors, right? So 52-week high is a very good indicator for momentum. There are other factors like, just the return in the past 12 months, right? Just rank stocks based on the 12-month return, on the 6-month return, or even 5-year return, things like that. We look at certain other indicators like, some moving average crossovers, Bollinger band based breakouts, and bunch of other things. And we combine different factors to come up with a strategy, right? So even on momentum side, you have a variation of these 8 strategies, whereas all of them will have pretty similar risk adjusted. I mean, the profile of returns will be very similar. They'll have like 80% correlation, right? Let's say 70-80% correlation. But still, you can diversify your portfolio within these to decrease the risk and enhance the return. So that's what we sort of do.
Awesome. I think Sonam perfectly summed up, right? Like,
Yeah.
for those who would be tuning onto the podcast to understand something about the equity markets, would get a complete end-to-end gistful analysis, if I may say so, right? So I mean, so now just to change gears a bit and
Hmm.
moving on to your content journey. I mean, that's
Hmm.
also something that everyone would want to hear, that how something that you work in your day job, which is so technical, how can you resonate that to content, right? So
Yeah.
how did that happen? Like, how did you go about the whole content thing? And then also, in like progressing further, we would like to know about your experience in the LinkedIn program as well. But to start off, like, how did the whole content journey come around?
Yes, yeah, definitely. So I sort of, you know, even before starting Right Research, I used to be very interested in whenever people used to ask me to speak at various places, right? So I think that was the starting point, and I used to work on a lot of different projects, try to go to different conferences to speak about these things, and whenever I would post about it, it would get like a lot of hits. So I had a couple of Medium posts that worked really well, and I used to get good response on LinkedIn, which was very encouraging. But I did not have like a planned way of posting. When I sort of started Right Research, I saw that Twitter was a very good source of users. People sort of followed market very actively over there. So I was really obsessed with Twitter for a long time. I used to post very regularly, try to experiment a lot over there, and that was something that I focused a lot on. LinkedIn, I thought, was more intellectual. It was not like something where you're getting users, investors very actively following you on that platform. I sort of we have a YouTube channel as well where we have a few followers. We're trying to do work on Instagram as well. We haven't been good at a lot of these platforms, but now we are slowly progressing. Slowly, we have a bunch of users who sort of follow us, and we are getting our hold of these content creation programs. The LI CAP program, I think, was really beneficial for me because I haven't had that training as a content creator. I haven't put in time to sort of you know what should be the journey, what should be the process, and how regularly should I be posting, what type of content would work or not work, experiment, and discuss that. So I think that was really interesting for me. Week on week posting, seeing the performance of these posts, evaluating it, seeing what other guys are doing, the type of responses they are getting, how enthusiastically they are working for it, listening from other creators, right, like Ankur Variku and all, who talk about their process and how they go about it. I think that all was very interesting. And then you understand the actual worth of content, right? How much, how you can leverage it to increase your reach and things like that. Yeah, so I mean, I sort of have become more passionate about this journey, and obviously I'll continue to learn. I'm not perfect at it. But I think I made a little bit of progress with this program, and I'll continue to learn and sort of try to grow, right?
So how do you manage your day, Sonam?
Hmm.
Like you have this entire market, obviously till 3:30. Maybe post that you would be, free, or maybe a little later. So how do you manage your content creation journey, your portfolio management, and how does your day look like?
Right. I mean, see, content creation, even we even do PR, right? Where we write for other, whenever a PR opportunity comes, we have to write for them, right? So writing and doing content is an important part of my day, right? And obviously during the market as I don't have to be busy 24x, because we let the algos run, right? That's our motto, right? uh, so we have certain intraday algos that run like that, we don't even need to touch, they run on their own. We have certain other market based algos, which sort of get done around 2 2:30, where we have to take a trade, and that again is a very automated process, so it's not like that it requires a lot of work. We have to obviously explore. If we are working on a model, improving it, then that is a continuous work which goes on parallel to this. uh, but yeah, we have to keep on top of the news, what's happening in the market, things like that. So I actually, during the algo cap program, what I used to do is that as my day sort of got wrapped up around 2 2:30, I would have like an hour or so where I would read news, think of topics, and put that effort into content creation. For the right research page, I have couple of people who are working with me on the content side, right? So people who help me with creating infographics, thinking on topics and things like that. So we have people in the team who are working exclusively on the content side as well. Yeah, but it's a process that we have to sort of get better at. The thing.
Understood. Understood. So, I- from content creation, I'm again coming to the market talk, because you mentioned about your algos running, right? So,
Hmm.
are these strategies, yeah, like your personal portfolio strategies which you run on a daily basis, or part of the right portfolio itself?
No, so see, the right research portfolio that you see primarily on small case are all equity portfolios, right, which
Right,
are slightly long term.
right,
But I have, personally, I've been part of the derivative space for a very long time. I think I've worked more on derivatives than equity in my whole career, right? So I also wanted to. I also work on some derivative strategies in the intraday space or long term, um, you know, long short strategies is something that I'm very passionate about. But offering it, you cannot offer these things to retail, right? Because that is very very risky, right? If I tell a naive investor and tell him, buy a future and option, and they will, you know, if there's a risk, then they will not be able to handle it, right? They don't understand his instrument. The risk is very high. It's leverage, things like that. So we initially actually did try to do this, and then we learned that we shouldn't be doing it, and we now only do it with institutions, right? So brokers and family offices who can allocate a larger capital. We just run it with larger institutional funds, and I think once we have like something which can run on smaller size and which is very very stable, that the retail guy will not worry about it too much. But still, even I don't think offering derivatives to retail is a very sensible thing. So yeah, we sort of work with institutions on that side.
So, what's your take on all these Twitter gurus, so-called gurus, so as to say, who post screenshots of their algo trading,
Yeah.
every day, making 1%, 2%, 3%, and showing off, or I don't know if whether it's true or
I think see, a lot of these people are not genuine, right? I think more than 50% of people are posting this a way to edit the screen and things like that. That could be happening. But secondly, what I also think is that everybody sort of has that nature, right? At the end of the day, as a strategy creator, I'm trying to sell my strategy, right? So because we operate in a very transparent manner, you can see our day to day performance. But I think if I were to sort of broadcast my performance every day, then because I'm trying to sell this, then I might end up broadcasting it on the good days, or on the bad days I might be like, yeah, theek hai, it was a bad day, right? So I think people are biased on Twitter. They want to show the good things because they're trying to sell it, and on the bad day they're like, "Ki, theek hai, this happened," right? So we actually are actually trying to be, and then that becomes like a big problem, right? Like last year we all had a very good year, right? So we kept on saying, oh, I crossed 100%, oh, I crossed this milestone, that milestone. In the moment the market crashed 10%, people were like, you lied to me, right?
Mm-hmm. Right. Right.
Yeah, so I think that as a even though you are creating content on social media to get users, it makes a lot of logical sense to talk about both the aspects of the process. There is no journey in investing that will only be plus plus plus, right? You will see bad days, and you have to talk about it. If you don't define the expectations well, then the user is going to go crazy on the bad day, right? That's what will happen, right? So I think, uh, but yeah, there's a nature of people to to talk about good things and not about bad things. Even in the LICAP program, I think we were seeing that there was one creator in my cohort who used to talk about risk only, right? Whereas everybody had other themes, right? So he would say that I whenever I post personal stories, whenever I do anything else, it gets a lot of response. But when I'm talking about risk in the market, then nobody cares, right? People sort
Yeah.
of have a bias toward positive things, right? So that's why as creator we sort of want to talk about positives, sort of say QB negatives is fine, right?
Agreed. I think that's where retail investor also needs to be a little more careful that they don't drag themselves into such screenshots and start trading aggressively. And maybe this is something which maybe our viewers can also learn, that
Yeah,
don't drag yourselves or don't overtrade just because you're seeing a lot of screenshots on social
yeah.
media platforms, and
Yeah, I think
there's a
the
FOMO,
regulators sort of
honestly.
need to. Yeah, the regulators need to sort of, I think, act on these things, right? There should be
Yeah.
some constraint on these guys of putting these screenshots, asking for money on whatever they're selling. We even get calls from people, right? Who are trying to explore our strategy. They say, okay, I followed this YouTuber, I lost this much money, right? But I cannot call anybody. There's no number to complain, right? So there's no liability for that person who is making money by selling all this, whatever they're selling, right? So I think there has to be some sort of controls on those things.
Fair enough. Fair enough.
So I mean, Sonam, just to cover up on the or end the discussion about li cap, right? Like before moving on to the next segment, I just wanted to understand your experience, right? Like how, I mean, like you said that I also felt it that everyone in the program was only
Hmm.
talking more about the wins, right? Like there was barely any conversation internally as well that focused on the losses or on the negative aspects of the entire 10-week journey, right? So I just wanted to understand from you that at the end of those 10 weeks, like how was it for you as an from an experience standpoint, right? Like would you recommend it to other people? Would you want some changes to it? Like how
Hmm.
did you grow as a creator in this 10-week
Yeah, I mean, I've
time
had
frame, if
quite
I
a
may say
journey, right?
so?
So when I sort of started this program, and they said ki you have to post 4 times a week, and then on that group there are people who are getting like a million views on a video that they post. I thought like, what do I have to do here? Right? I mean, how do I contribute to this? So I used to experiment with a bunch of things. I used to follow some creators, see what they're posting. I did a lot of stupid things. I got some concerned call from friends that what has happened to you? Why are you posting all this? Right. So I initially I did all that, but but then I used to take it out. I did that. That we had a cohort of around 10 people. So I used to take out my post and I used to discuss it with people. See, I wrote this. I put in so much effort. I thought this would work really well. This is a good topic. Why didn't it work? Please tell me. So people sort of told me that you have to make it catchy on the first line. You have to make sure that whatever picture or whatever you put should catch attention and things like that. And as I made those modification in the post, I thought I saw them actually start to do a little bit better, right? So which was really encouraging. And after I think a few weeks of around around 3 4 weeks 4 5 weeks into the program, I got a little confident about it, right? That I It was initially a big challenge for me to come up with this post and uh, differentiate myself in this sea of content creators who are doing so well, right? But then I got a little bit confident. Okay, this is my style. This is what I want to. This is what works for me, and this is what I will do to probably sort of bring out my voice. And yeah, I picked up topics that used to come out from the trending topics set, and things like that, which I posted a lot of these personal stories around weekends, which worked really well for me. Yeah, so it was interesting. I think I have sort of progressed, become a little confident in what I should post, how I should structure the content, and why we should actually be putting this much effort into content, because there's so much work to it. You're building a community, you're building your voice.
So, Sonam,
Hmm.
just two follow-up questions to what you've said, right? Like, one thing that I really wanted to understand, and this is something that we ask almost all our guests, is that how difficult it is to create content consistently with a full-time job or a business that you're directly handling. And second is something that no one really talks about is
Hmm.
content fatigue, right? Like everyone is just talking about consistency and you posting in, day out, engagement numbers, etc., right? Like, so what's your take on these two things? Like how do the two run parallelly, and content fatigue, like how bad or how extreme can
So
it
I
go
mean,
to?
see, if you sort of, I think in the program people talked about setting a process, right? And that is what will work. And if you have a process, if you broadly know the type of content that you're going to create, the type of topics that you're going to work, then the process becomes sort of easy, right? So for me, write about topics in the market, topics in the business arena, or some entrepreneurial stories, right? That's what I sort of write about, right? And I know where what type of topics, either it has to be some insightful content about the market related to a macro or some event like that, or some certain good surveys or some new insight that have come out in the market by other players. You could be writing things about it. So I follow that type of news content to get those ideas, or about certain personal stories. I whatever books I'm reading, whatever things are happening, I get a lot of ideas from those. And I just jot them down, right? So that's what sort of works for me. So I always have, right, like even on my the person who's working with me on content, right, even he has come up with like a bunch of 5 6 good topics that we always have in our list that we could be working on. And uh, and I think creating the post is again another thing, right, where you have to start it off with an engaging manner, bring out certain value to the people who are reading it, right? uh, yeah, so I think once you set up that process, things will become a little bit clearer for you. Yeah, that's what my insight is. And yeah, posting, if like sticking to a very very strict posting schedule is sometimes hectic, right? Because there are days when you don't get time, right, where you will not get time, and right, and working on content becomes a burden. But if you can adjust it around, if you have something planned in the beginning as well, so that should work for you.
Awesome. I think that makes a lot of sense.
Hmm.
So,
How did it go for you, Samarth? It was
I mean, so for me, to be very honest, like I was creating content on LinkedIn since last year. Like in the later phases of last year is when I started writing on LinkedIn, right? And before the Creator Accelerator program, I was a part of the LinkedIn Creator India program. So
okay.
that was not a program per se, but more of like the Avengers Assemble sort of a thing. It was like the creators on LinkedIn Assemble sort of a thing, wherein they were trying
Yeah.
to get people in. And to be honest, my biggest takeaway from the program was the people. I think the network of those
Yeah.
200 people, like checking on everyone on a daily basis that, hey, did this content work? Did this
Yeah.
not work? Like getting to know about new tools, right? So I was discussing with Samyak just before our recording started. So he was asking about Descript, and I think we had a session as well in
Yeah.
the
Yeah.
LICA
Yeah.
program, yeah, about Descript. So I think the people that you meet and the tools and all those learnings were something that were the most important for me. Numbers,
Yeah.
engagement, and all is fine, right? Like
Yeah.
that's not something that's extremely important. And just for your information, like the last episode that we had recorded was with Poor, and he also
Yeah.
was a part of the LICAP program,
Yeah.
right?
Yeah.
So he was telling that for him content creation is more about discussing those creative ideas, right, rather than just focusing on numbers that itne likes mile, itne comments
Yeah.
aaye, these
Yeah.
are the
I
impressions.
think like being more genuine and more, those posts will work good by themselves instead of becoming very very focused and researching and
Correct, correct, correct. But I think this like through the LICAP program, LinkedIn in itself has given an opportunity to a lot of creative folks who would be shy to voice out, say on a YouTube or an Instagram, which is more audio
yeah.
visual in nature, than LinkedIn, which is more textual in nature. So that embarrassment factor subsides to a great extent. So I think great opportunity for
Yes.
creators.
No, I mean, especially for me, I used to looked at LinkedIn, where I know a lot of people sitting who were bugged with a lot of people, and used to be a little bit more conservative in what I sort of wrote, but now I've become much more uh, you know,
Awesome,
willing to
great.
create better content. Yeah.
Yeah. So I think now Samyak could be having very important questions. So this is what we ask to all our guests in the last segment. It's more about your personal life, your books that you
Yeah.
read, and things like that. So on to Samyak for that.
So just two questions, and we end every conversation with somewhat the same kind of question. So obviously, you have been in the markets for quite some time now, right? So first couple of things are like who like has been your role model, or who has been your biggest motivating factor when it comes to investing in your investing journey, or making uh, sure that you have a career in this finance industry, stock market only. So, who has been your motivational factor or your role model in this entire journey?
So I think, see, my role models have. I've had a lot of role models actually that have sort of changed from time to time, right? So like I said, I started with in the team where I used to work with Radhika Gupta, Nalin Muni, Dharan Jatu, who are all huge people in the industry right now. So I used to be really motivated by what they're doing. Used to look up to that. Then I joined Edelweiss, where again, you have these amazing people. I used to work in the team, which was run by Vikas Khimani, right? He was the boss of that floor that I used to work with. And so that was again, a huge person to look up to, right? Then I worked at HSBC. I used to work with a trader in London, right, who was amazing, and he sort of helped me a lot. He used to guide me, and I used to work very actively. So I used to follow him very actively. So at QPlum also, I worked with Gaurav Chakravarti, who's like one of the first people who started TAR research to 15 years of HFT journey, and then he's built these couple of big organizations in finance. So I used to look up to them. So yeah, you know, I've had opportunity to work with these wonderful people who have been good guiding lights for me. And now as an entrepreneur, I get to see many more people in the industry who are, be it older folks or be it new folks who are sort of experimenting and coming up with very interesting things. So this so much guidance, so many people to look up to, right?
Yeah, absolutely. So,
Yeah.
continuing this, what will be your advice as a mentor to a budding investor or a trader?
So I think, see, when you're talking about trading or investing, I think it has to be a journey of discipline, right? And when you are starting off, people can be a little bit impulsive, a little bit uh, not very, not understanding the whole process, and expecting rewards initially. I think you have to learn it. You have to stick with it, be persistent with it, and then learn. I was not a good trader when I started. I used to work on these algos, but yeah, on my personal trading journey, I was not the best investor, right? I made my own set of mistakes, and it has taken years for me to get better at that, right? So I think it's a journey that you have to sort of get better at. But there can be certain rules of discipline, like consistently saving, consistently investing, and trusting the market to deliver in the long term, that can help you build your long term wealth. And understanding the risk of various instruments. Like if you start experimenting with future and options and you put all your money into it, then I don't think that's a good idea until unless you are an expert, right? But start saving in equity instruments, right? Or I mean, that is something that they should be doing. And obviously, uh, I mean, learn from the market. It might be a little a journey, but it's a very fruitful journey. It's a very interesting journey. You will enjoy it really well.
Absolutely. So I think you hit the nail on the coffin that discipline is the main thing,
Mm.
right? Whether you are a equity investor, then maybe you should be consistently doing SIPs or putting it in your
Mm.
favorite stocks, or if you are a derivative trader, then following your system in a disciplined way. Maybe that's the only holy grail.
Yeah.
That's what you were trying to say to this entire
Yes. Yes.
session. And then lastly, just one question. Uh, we always ask that any 3 to 4 good book recommendations for our viewers, which maybe change your life or help you grow in your trading or personal journey.
Definitely. I'm really into books, and I sort of read a lot of fiction and non-fiction both. So the book that I'm reading right now is this book, Psychology of Money by Morgan Housel, right? It's a really good book, and I think that's why I keep on talking about discipline, because that's what he's talking about in the initial chapters, right? That you don't need to be like exceptional investor. You just have to be average but disciplined and systematic, right? So I think that is an amazing book for people to read. Uh, I also really liked a book I read recently, which is Atomic Habits, right? Where he's talking about building these small habits that can compound over the long term and make a huge difference into your lives. Um, Another book I read recently was The Green Lights by Matthew McConaughey. I think it has very good lessons from his life. It was really good. Talking about the markets, I really like the book Zero to One, right? Which again has very good insights for entrepreneurs. Um, Another book I read recently was Think Like a Monk by Jay Shetty. I think that's again a very good. I what I do is I sort of get audiobook versions of these books, and I listen to them when I run. So that is sort of a daily routine where I get these insights on a daily basis, which I think is really important. But yeah, these are some of the books which have had a lot of impact in my life recently, and I really recommend people to sort of look at these books.
I think Psychology of Money and Atomic Habits are in everyone's top 5, top 10 books. Like
I
they
think
are
Zero
really
to One as
amazing
well.
books.
So
And yeah, Zero to One who were starting their entrepreneurial journey, and they recommended Zero to One by Peter Thiel as well. So I think Psychology of Money was something I read last year, and it had such a profound impact that that guy, he is known for so many good reasons. And I think towards the end of the book, it will come, maybe you might not have read there, but he only does index investing to a particular extent. He doesn't do any other kind of investing. He's like just a Vanguard fan, and he's been doing that consistently, and that's how he's like financially free right now. So maybe I showed up the suspense, but that's in the later part of the book that comes in, I
okay,
think, when you read it. So yeah, many thanks for the recommendations, and I think it was a lovely episode, and to learn from you, your content journey, and obviously your quant journey. And I really look forward to having you again and talking more about maybe your quant journey more, because I think this is a subject which people are not very technically sound about. I think there's a lot of knowledge lacking which is there, and maybe it should be a part of your college study or what, I don't know, but something into quant should be a curriculum course which people should learn. Maybe they are not science background or commerce background. It should be a generic case study for
Yeah,
everyone
I think
studying, I feel.
India doesn't have India doesn't even have finance as part of the school
Exactly.
curriculum. A lot needs to change for us.
Yes, yes. So understood. So yeah,
Thank you
thank you,
so much.
Sonam. Any last words from Samarth?
Yeah. I mean, I'm just waiting for more content from you on LinkedIn and hopefully seeing you, killing it in other LICAP alumni events now that we are no longer LICAP members but LICAP alums.
Yeah, yeah. No, I'm looking forward to seeing everybody. I mean, I now sort of follow so many people from that program, and I sort of am so happy to see each of their posts. So I think it's a really interesting thing. Really looking forward to sort of interacting with people.
Perfect.
Awesome. Thank you
So
so much again, Sonam, for
Yeah.
yeah,
Thank you.
thanks a
It was
lot
great talking
again
to both of
for
you guys. Yeah.
yeah.